So we've talked about simplification and complexity and the system being broken. Let's separate this out because I think it really goes to the question of the timing of tax reform. How do you think about corporate tax reform and individual tax reform? Are they on separate tracks? Can they be on separate tracks? And then what's that tell us about when tax reform might happen?
Interesting. For me, and I'd love to hear your point of view on this, for me, you can't separate them. The president has been talking lately about reforming the corporate tax system, but that's just the corporations that pay the corporate income tax. A whole lot of businesses in this country don't pay corporate income taxes. They pay through the individual tax system. And they all have a myriad of interests. So you've got these huge multinational global corporations, and then you've got the mom and pop sweet shop down on the corner. And they have vastly different interests. I don't know how you could just reform the corporate side and not deal with all the rest of the businesses that operate outside of the corporate system. So I think you've got to look at it globally. I don't know how you can take bites of this apple. And again, if it's as complicated as I think it is, and I think we agree that it is, I think you've got to have a complicated solution to fix it. When that occurs, I'm still not certain yet. But I still like your point of we've started to start, which means maybe we won't stop, because something's got to be done.
Well, when I look at the system, I think that the corporate tax is in some ways more in need of a fix in two areas. One, the rate has to come down. It is a difficult thing for American business to compete in a global economy when whatever's left over that's going to be returned to the shareholders is taxed at 22 or 25% when the shareholders own a foreign company, but it's taxed at 35% when the shareholders own a U.S. company. That's a competitive disadvantage, and I think that's real. The second thing is that our territorial tax, or our worldwide tax system, is at odds with the rest of the world. There are only 5 countries that still hang out on a truly worldwide tax system. Most have gone to some kind of a territorial system, so they tax income associated with activity within their borders, and then they have some anti-abuse rules, which interestingly I think are going to get a lot tougher around the world, so things may start to find a middle ground. But we've got to fix those two things. Our problem is, for the last 25 years, we've been raising corporate taxes to pay for temporary tax provisions, and so a lot of the base broadening that might pay for corporate rate reductions already been done. It's very hard to find corporate tax reforms, tax increases within the corporate sector to drive that rate down. If you go about after things like depreciation, well, you're absolutely right. Small businesses have depreciation. They're not going to give that up so that large businesses in corporate form can have a tax cut. You're going to have to do those things together. Some people talk about moving to a business tax and putting all business into a business activity tax. I think my former colleagues in the big accounting firms would be happy with that solution. That is truly a complex world if you start going after folks and trying to take the sole proprietor's income and say, well, that income, that was personal, and this income over here, that was business, and we're going to have some way of filtering out the personal and the business. That'll be a lovely world to make money in for a lot of tax advisors.
Oh, well, a lot of people make money on the complexities. A couple of things you said. You wrote an excellent article about corporate tax reform. It's actually ongoing. And it becomes harder and harder to reform the system. But when you were talking, it triggered a thought in my head of, does the corporate income tax make any sense? I went to a conference a couple of years ago with the economists from around the country, all brilliant people. Larry Summers was the moderator. And the question was, who pays the corporate income tax? Is it the shareholders? Is it the consumers? Is it the workers? And they spent an hour and a half, these brilliant people, talking way over my head, and came to a very simple conclusion. They didn't know. Nobody knows who pays it. Maybe again, that's an indication that the tax is old. I agree with you about the anti-abuse rules. In Europe more than here right now, you hear the word morality, when it comes to tax. It's sort of like, religion and tax. I don't understand how those words go together, and I believe in morality, and I strongly believe in religion, but not with the word tax attached to it. And there's a sense in the world that the multinationals basically cheat. And I've made the argument to people who tell me that, say, well, the way I was taught tax, there's a difference between evasion and avoidance. Evasion is illegal. Avoidance, they pay people like you and me, to corporations, to pay the minimum amount of taxes to benefit their shareholders, and there's nothing wrong with it. Suddenly it's become immoral. And I think the whole corporate tax system is going to be under attack. I don't think in this country we quite see it as much as it's going on in Europe, but I think we will. Again, can you isolate that and reform it? I personally don't think so, but I could be dead wrong. You're going to have to figure it out with the whole individual side in there. And then the question becomes, are you going to bring in alternatives? I agree with you that the income tax is not going to die anytime soon. But is it going to be supplemented by something? Are we going to have the Michael Gratz plan, so-called, where you have a value-added tax for most people, and then an income tax, say about $100,000 of taxable income? People would pay a flat income tax. I don't know, but it's shaking. Something's going to change here in the next decade, I would think.
I think that's true, and that's really one of the profound questions in our tax policy is, are we going to go to a consumption tax of some kind as an additional way to fund the government? You could tomorrow enact a value-added tax or a carbon tax or a broad-based energy tax and take all the revenue from that and use it to simply buy down tax rates. And then you'd get the tax cut on the income tax side. You wouldn't have to pay the political price of limiting people's mortgage interest deductions or taxing their health benefits. You would just take some of the value out of those incentives by pushing the rate down. You wouldn't have to have a fight about incorporated businesses and non-incorporated businesses. They'd both get to participate in the value-added tax, which I think most economists would say falls primarily on individuals, and you'd buy down their rate and people would be happier. On the income tax side, they'd be miserable on the sales tax side. So our real problem is, are we willing to raise taxes? And all prior tax reforms have been in the context of either revenue neutral or actually tax cuts. And when you can do that, then people are very happy that reform makes a lot of sense to them. When you raise taxes, people get unhappy.
And so the question becomes, and somebody has got to explain this to the country, I think, and I think that's where leadership comes in. What are we at, $6 trillion in debt now? This is going to come due and payable at some point in time. How do you run the government the way we're running the government? Be the United States of America the way we want to be the United States of America, run a $16 trillion debt, not increase revenue, which means people's income taxes are going to go up. And until somebody prepares the country for that inevitability, I wouldn't even call it a possibility, I think the people who run around and say, you pay too much in taxes are actually a little dangerous. Clearly we don't pay too much in taxes. You can argue we spend too much. You can argue we tax too little or too much, but something's got to give along the way. I think it's disingenuous to tell people you pay too much in taxes when we are this much in debt.
Well, that's an interesting thought. One of the clever things I heard someone say a few months ago was, what the tax burden is. The tax burden is always exactly equal to what the government spends. And the only question is that tax burden going to be paid by the current group of people who are spending that money, or are they going to take a piece of that tax burden and shift it onto their children and grandchildren? And we're making that decision. We are saying we're going to have a tax burden that's up 22, 23% of GDP. We're only going to pay 17 or 18 points of that, and we're going to let the next generations pay the gap.